Hello, dear traders. Welcome. First of all, my apologies. I tried to record the weekly MK web summary before, and for some reason the sound wasn't there. So hopefully this one will work with the sound. So once I uploaded this one, I will delete the previous one, which has no audio. Okay. So let's get started. I guess many of you are following the current geopolitical events. We had the news yesterday that the Wagner Group was moving towards Moscow. We had a potential civil war in Russia, and just a few hours ago we had the news that apparently the Wagner Group stopped this march, as they called it. So there's a lot on the agenda. This could translate into dollar strength, but as we know, the dominant factor is the market structure, okay? We know it's all about the money positions, the stops, etc. All the fundamental reasons take a minor role compared to the market structure. That's what we know. Okay, so let's get started. Euro dollar, the world's largest financial market. So on the 19th, at the beginning of the week, we had this MTS above the price. So it took it out. And then we had this interesting situation. You see on the 20th at 12:43, I wrote, Euro dollar here on the forward chart is stuck between longies and shorties. So as you can see, above the price, we have dumb money long positions, the green bars, and below the price, we have dumb money short positions, the red bars. So that was, it was easy to predict that the market would go sideways and flat for some time, which is exactly what happened, okay? So you can use a market causality also to predict sideways market, a range mode like here, because as you know, via the time and range principle, there is no reason for the smart money to just do a breakout in either of those directions, which would make either longies or shorties on the dumb money side win. As we know, they don't do that. Okay, so when sideways as predicted. Then on the 23rd, at 5:10 in the morning, we saw that, you know, they took out this inner range medium-term stop at the order gap zone. And then what happened, they actually went down further. So at 2:04, you see a road, there can be a pullback to the upper order gap zone, but we see that the dumb money is switching from short to long. Alright, so that of course leaves euro dollar in a rather bearish state overall, as you can see on the day chart. Okay, so it went down and cleared the moving average with rather some longies in the market, and the squeeze against the shorties is currently dying out. Okay, so it looks rather bearish. So with a bit of fundamental pressure, could be that there's dollar strength. We keep that in mind as a theme for the week. Okay, so dollar cut. Remember, we had this very long downtrend over days and weeks against the dumb money longies. This typical squeeze, longies in the market. The smart money algos push the market down against them again and again and again. Okay, so here again, we see longies in the market, and of course they go down further and clear the low. Yeah, there's no mercy for the longies. I wrote, we see an expanding squeeze curve, squeeze line. And what happened then at 1:30, we have this two inner range empties above the price, and it's not difficult to see that this is a good long trade. Okay, so I wrote, as soon as the green squeeze line will slope downwards, the smart money should take the inner range medium term stop with a pullback up. Okay, so that was a nice long trade. The next day on the 23rd, we saw how they started to move towards the target, and then the same day they kissed the first target and then took both out. Look at this precision, exactly above the second medium-term stop and the pullback down. Okay, but remember that despite there was a nice long trade, overall, look at that, we have an expanding squeeze mode on the day chart. So dollar cut remains bearish overall, believe it or not. Can do pullbacks, but if more longies come in next week, they're gonna continue down move, especially if that fuels the squeeze. That's how this works. Bitcoin, very interesting. So we saw that they went for this medium-term stop here precisely with this pin, then did a bit of a pullback, but then continued the up move. Okay, and keep in mind, so what's happening here is, look, the market is very sensitive to any dumb money shorties. So you see a bit of dumb money shorties can already create big up moves, and the reason for that is of course that most traders, investors in Bitcoin are long only. Okay, That's why there's so much dumb money longies. And as you see, like as soon as some shorties came in, boom, they went for it, moved towards the 30k level, right, and kissed this high here on the higher time frames. Very interesting. It's a long-term play. Okay, don't try to short-term trade Bitcoin too much, but very interesting to see that. And keep in mind how all the markets, like the metals, we come to that now, are converging to Forex, not the other way around. Like look at here, gold, 8:30 in the morning, 31 and the 21st. Look, we have longies in the market. A squeeze is emerging. We have short-term stops below the price. So of course they're gonna go down, okay, and take out those stops. Alright, so here the 22nd, you see the nice down move towards the lower targets. A long is coming in again and again, buying. Okay, the squeeze expands. So they go all the way down and, you know, take out the longies. Only once some longies left, there was even a pullback. Okay, and then as soon as new longies came in and the squeeze line was sloping upwards again, immediately this pullback was stopped as well. Okay. Understand how powerful that is. It's all about the dark money positions, the dark money flow. These create squeezes, and as you can see here in the metal, same like Bitcoin, crypto, it's getting more and more similar to Forex, where this is implemented hardcore. Same with silver. Okay, look at that. Longies, expanding squeeze, short-term stops below the price. Kaboom! Look at that. Typical stop hunt, taking out the stops that turn yellow and then disappear. Okay, smart money going for the kill in the metals. Okay, has nothing to do with some fundamentals. It's about the market structure. And in the news, you see all kinds of fairy tales and ludic fallacies, as we call them, why the metals went down. Yeah, they come with psychology and all kinds of weird reasoning, which has no statistical evidence, by the way. Okay, it's not. It's just a fairy tale. And here you see the market structure, which shows in a leading way and predicts what's going on. Look at that. Here you see short-term stops below the price. Dark money long is in the market. So boom, going all the way down. Okay, expanding squeeze. Now, what happened then with the yen pairs? Remember from last week, we had at the beginning of the week already this really extreme squeeze mode, the squeeze line going up. Shorties continue to sell, thinking they can short the market and enter cheaply into the market. And of course, as we know, all what happens is they're gonna go for the high again and again. Like here, they took the medium-term stop. That was not difficult to see. Okay, and Euro Yen continued to be in that squeeze mode and going up. Then at some point, as you can see, some shorties left the market, and then they did a pullback to take out the inner range MTS. But as you can see here on the high time frame, with this upward pointing squeeze line and shorties, if more shorties come in, they're gonna go for the LTS. As simple as that. Same with the beast here, pound yen. These option strike signals, okay, they're not tradable without the proper collapse. So remember that, you know, they're gonna prioritize the squeeze, and similar to Euro Yen, they went for the upper medium-term stop first, and then, you know, pretty much played Pac-Man. I mean, they filled this order, this option strike signal on the M30 chart, and then they filled the medium-term stop. Then they did a bit of a house clean here, and then they took the short-term stop. But overall, you see like how, despite this Pac-Man on the lower time frame, we have a squeeze mode on the higher time frame. Okay, shorties in the market and an expanding squeeze. So if more shorties come in, they're gonna retest the highs. Okay, as simple as that. Dollar yen a bit more complex. So at the beginning of the week, we had the option strike target there with a normal pullback, and however, also there at the end of the day, the squeeze dominated. And even with a bit of longies coming in here, there's still all the long-term stops above the price, the pink lines. Shorties dominate, so overall this looks rather bullish unless more longies come in. Yeah. So the ones who caught some pips on the way up there, well done. So they went all the way up. Of course, at some point we had then again some shorties getting out, and then we had this inner range medium-term stop. But as you can see from this day chart screenshot, never trade against the squeeze, okay? Remember, this is a cardinal sin. Do not do it. Euro pound, also interesting. They took this inner range medium term stop with this pin. A lot of precision there against, and then bounced all the way up after that. Took the upper one, okay. You can see on the 23rd, like it did a typical 4-hour reversal down, cleared the high, longies in the market, even though some longies were leaving, still overall more longies, so they did a 4-hour reversal down in the end. And when you, as you can see here on the day chart, okay, it came down against the Damani longies, the green bars. However, we see, of course, that the squeeze line is now collapsing, so the squeeze can find its end unless longies come in again next week, okay, green bars, in case of which it gets fueled, and then they would answer to that with retesting the low and going for the LTS. So keep that in mind for next week as well. All right. Aussie dollar was a bit tricky, not at the beginning of the week, later. So first we had the nice up move against the shorties. We see the squeeze fueled by more and more Damani sellers, the red bars. So the algos push Aussie up again and again and again. What happens then? Shorties get kicked out, leave the market, take the losses. So collapse in the squeeze line and therefore normalization move down. Okay. Then pull back up to fill this option strike target. Good if you caught this. But this was a bit tricky, and here I made a mistake, and I should elaborate on this. On the 22nd, I saw this inner range MTS, and I thought, okay, a bit of long is on the way, but still I can buy towards it. But I made a mistake to not check the higher time frame, because there you can see they first needed to clear the moving averages, okay? That's why we have to always check the higher time frame. So this is dominant. Some longies, moving averages below. So all 4 moving averages can be cleared with a down move. And that's why I got stopped out from my long trade here towards the inner range stop. Instead, they filled those open option strike targets. Okay, so I made a mistake there. It happens now and then. And yeah, if I would have checked the higher time frame earlier, I would have seen, okay, moving averages there. But anyways, I didn't risk much on it, but still. Kiwi dollar, so at the beginning of the week, it looked like this. It filled the inner range medium term stop. It also filled the option strike target here on the 1-hour chart. Look at this precision again, okay, exactly with a pin to the target and then bounces. I mean, the precision is amazing of the market causality. Then we had the situation that we knew that they take the upper inner range stop, okay. So, of course, they did that, boom, okay, and well done if you caught some long trade there. But also here, remember that when you look at the day chart, look, it took the moving averages above the price. It has more longies and shorties, so it looks slightly bearish, neutral bearish, okay? If longies come in, it's going to go down further like it did already here. Look, it took the option strike target here. It can take the next one easily, okay? Keep that in mind for Kiwi next week. Pound Aussie first took this medium-term stop target with precision and then took the upper one. Nice one if you caught it. These were nice trades here in Pound Aussie. First the inner range medium-term stop, 1, 2, 3 of them. Okay, nice trades. I hope you caught some of that. It behaved very well. And yeah, just went for those targets, okay? Filled. And on the higher time frame, you can see that it may reach even for the high there. I don't insist on a long trade there, but you see, like, this can happen. Could even reach for the high. Okay, Euro Aussie first, they did a nice move there towards this inner range medium term stop. So there was a nice trade, kaboom, nice long trade. Well done if you caught it. This one was a bit more tricky, so allow me to elaborate. So we had an open option strike target with a nice target level. But again, I did the same mistake again. So on the higher time frame, what do we see? We had a moving average. So this prioritize taking out the moving averages stops, okay, on the day chart, especially with the dumb money needing to be shaken off, which happened then, okay? So they shook off the dumb money there. Pound dollar was a bit less tradable. So first we had this nice up move against the squeeze. Maybe you caught some long trades there. And then at some point it got a bit more complex where the squeeze collapse like in Aussie and the normalization down as a response on the 1 hour chart. And After that, it was a little bit whipsawy, so a bit going sideways. Low money flow, changing a lot, no squeeze. So within the for our band range, so very neutral. You can do a range scalping, what we don't do position trades with that situation. You see on the day chart that some longies are coming in, and also there's the squeeze against the shorties is in the process of completely dying out. So that means it can even normalize since it took the highs. Okay, so it's quite neutral now. So you see that overall, compared to previous weeks, I would say this week was a little bit more tricky because of Aussie dollar, but also some really nice trades. Well done if you caught some of those. Okay, you see, like often we had a continuation of the squeeze moves against the dumb money, retesting the lows like here, or retesting the highs like in the yen pairs. We had some cool trades like this inner range pullback trade, not difficult at all. Bitcoin really followed the market causality there. Metals, okay, did what was expected, going after the dumb money longies. The world doesn't understand why the price of metal falls. Well, the answer is this. Okay, dumb money longies are buying it. That is the answer, but the world doesn't understand that. The world is in ignorance. And yeah, you see how powerful the squeezes are on the higher time frames. The smart money algos don't care if they have to overstretch a market like here. They will do that. Okay, they are not under any obligation to normalize the range or whatever. Yeah, like they can push the markets wherever they want, even over days. And keep that in mind. Never trade against that force. Okay, when the dumb money is caught on one side, and then you know the smart money is finishing them off. All right, do not fight that, and certainly don't be on the receiving side of that in any shape or form. Okay, that's very important. So yeah, it's typical that after a squeeze phase, the market mode is a little bit more tricky, and just always be careful to do your homework and to actually, you know, check the higher time frames. Like as I showed here in Aussie, I didn't do that and I got stopped out there, which is fine. You know, you can't win every single trade. You need to be used to getting stopped out, and even either because you made a mistake, like I did in Aussie, or there was a dumb money switch which was unexpected, etc. Okay, so you need to be also someone who is good at taking a stop out. All right, don't insist on every single trade being a winner. Yeah, that's when the problem starts. Just be a disciplined trader, that's all. And also take note how the market causality is able to predict sideways markets and all that. Okay, so interesting week, some really good trades. Some markets were a little bit more tricky like usual, but also on the geopolitical front, we have a lot of movement news by the minute here. I will follow it tonight also, and I will see what happens with Russia and Ukraine. And yeah, I wish you a fantastic weekend and a fantastic trading week next week. All right, always be impeccable with your analysis when you place your trades. Okay, do it based on the market causality. This is a dominant factor in all major markets now. Okay, and prioritize correctly. If you see the nice target and it seems tradable, of course you can take the trade, like we had many examples also this week. Lots of love. Take care. I hope the sound this time recorded. Goodbye.